You're listening to the Practical Wealth Show with Curtis May.
All right, hey, welcome to another episode of the Practical Wealth Show. So I'm really excited. I have Mr. Gary Boomershine. I'm going to tell you a secret. I have been following Gary for at least a good 10 years. And I didn't realize it. And then I was invited to have him come on. I looked at some of my old journal. I'm a pack rat, so I save everything in regards to money. And I says, wait a minute. I got books. I got a whole binder full of newsletters from him. I know this guy, or knowing of him. So I'm really excited, and y'all really, you should be excited. Get your notepads out because we're going to, bring some heat on the show today. So let me tell you a little about Gary. Gary founded realestateinvestor.com in 2005 out of a need to scale and grow his own real estate investing and home buying business, and with a family legacy in the real estate niche. And he has a long, successful career. He noticed a glaring opportunity to leverage, people, technology, and he's really been able to scale and run his real estate business like a business, right? And he's got a lot of perspective on private lending, on the economy, on developing financial freedom. So we're going to talk about all that today. Much time is allowed that I can get out of them. But Gary, welcome to the Practical Wealth Show.
It's great to be here. Super excited, and I feel great that you've been following me for 10 years. What a journey. So hopefully I can deliver a lot of value to everybody that follows you, Curtis, and we'll have some fun. And I am known a little bit as the nutty professor, and I'm a computer engineer by trade. Kind of funny how I went off in a different direction from real estate. So I was a licensed agent when I turned 18. I'm dating myself because I'm 52. So 1987, I graduated from high school, and literally 3 weeks later, I had a real estate license. Now, kind of not necessarily totally by choice, we had a family real estate business, and we had a bunch of rental properties. And so I was the youngest, and that's what we did. I paid for college and holding open houses and door knocking, and also fixing and painting, rental properties. And I'm from the Silicon Valley, California area. So had a mentor in my life, and which probably has one of my biggest nuggets for everybody is have really good mentors and good coaches. They said, hey, it was actually senior vice president of all of Macy's, actually from Chicago West.
Wow.
Who took me under his wing. And he said, Gary, the future is computers. So get some sort of degree. And as I didn't want to take physics. I had a terrible experience in high school, much more mathematical. And so anyway, I found this thing called computer science engineering at UC Davis. And so I did that and went down the technology route. And then it was 2004. So graduated from college 1991, beginning of 92. 12 years later, my wife and I, after traveling all over the world, working 80-hour weeks, never seeing the light, had great jobs, but I was, there was no life. And my wife and I had two babies. We had a 4-year-old and a 2-month-old. And we said, you know what, let's go back to our roots. And so I went full-time real estate investing in 2004. And that's not a best practice, by the way. I don't recommend husband and wife with a mortgage and, the mortgage munchkin and marriage and try to go off full-time real estate. But I did, and never looked back. It's been a great journey. So I love talking real estate. I love talking lending. I love talking infinite banking. And I know your clients follow you for all that stuff. So today we'll talk about generating wealth using real estate as a vehicle and have some fun.
So let's talk about that. So our goal is financial freedom, right? And so tell them why your favorite asset class is real estate and the opportunities that you see, down the pike, what they should be, kind of thinking about, and let's riff on that a little bit.
There's product everywhere.
Yeah.
So, and especially if you're looking at it correctly, a lot of what I'm going to talk about today is you want to think like a banker. There's the banker, and this is really hard for people to grasp, but the banks, if you think about the banks, if you think about the biggest buildings on every street corner, everywhere in the world, they're not real estate investors.
That's right.
They're not. They're bankers.
Yeah.
And so bankers, and it's still, if people really understood, you got the real estate investor. Usually, they do all the hard work. They have to learn the strategies. They got to care for the property. They got to raise the money. They got to do the marketing to find the deals.
Yep.
And then when they need the money, who do they go to? They go to the banker, right?
Right.
And who writes the rules? The banker. It's not the investor.
That's right.
So the investor who borrows money, using the real estate as collateral, as well as signing over their firstborn and everything else. Right. Now so then the investor, now the fun starts, right? Now they got to actually go fix up the property and they got to rent it out. And who's the first to get paid? The banker. Who's the last to get paid? The real estate investor. And so people don't understand that a real estate investor finds a physical asset called real estate, and they use that as the collateral. Okay. But they also usually have to come up with a down payment. They do all the work, et cetera. A banker literally prints a piece of paper called a promissory note, an IOU. And as long as somebody's willing to sign on the dotted line, banks use that as the collateral. So literally they do nothing. And if actually people understood how money is created from a loan out of thin air. And so bankers are always looking at the risk and the downside, and the investors are always looking at the upside. So I'll tell a little. And so when I talk real estate, I say, you want to think like a banker and look at the downside. And I think we should all be doing both. I think we should be buying physical assets and holding them for the long haul. And I'm going to explain something around that in a second. And I also think we should, instead of using our cash and keeping it in the bank, which is making somebody else rich, right? I like to get the velocity of money, and I like to lend that out. And I do that for passive income. And it's also, if you do it right, it's a great hedge against a downturning market, right? You think about people that are buying stocks, and sometimes they're buying, options and betting on the upside and the downside. We can do the same thing with real estate. I love real estate because we still have some amazing benefits. Warren Buffett, one of the acronyms is IDEAL. So you can look it up on the internet, but there's multiple benefits that we can get off of real estate. At least we still have them today, unless we'll see what happens here. But we get the appreciation. And we also, there's capital gain and tax benefits. So I think holding real estate is going to be super important as we look at what's going on in this world, not just the United States, but people need to be looking at holding physical assets and commodities. And I think real estate is a great one if done right. And then lending is a great way to manage the downside.
Explain done right when you said real estate. What does that mean to you?
Yeah. So both sides. So on the real estate, when I'm buying real estate, like we're in lots of bubble markets, and I'm going to stand back really quick. Okay. Real estate's been a 7-year cycle. Actually, to the day, it's to what's called the Shemitah, which is the Jewish calendar. And you can actually see it for 100 years. It's been a 7-year cycle. It just happens that this is the longest cycle we've ever seen in history while we've had a Federal Reserve, fake banking system in place. And the cycles have, we look at 2001, 9/11. That was the beginning of one cycle. Market imploded. 2008 with the mortgage crisis collapse. That was the 7 years. And if we go back, it has not been natural supply and demand. It's always been what I've been terming for 5 years on 200 podcasts, talking about how it's always been a boogeyman event. Now, I'm not going to get conspiratorial. Boogeyman just means it's a fake sort of event that's happened. And that's what's really caused the market turns. Vietnam War, oil embargo, mortgage collapse, and you just go all the way back 100 years. So it just happens that this one is called COVID. And there's, if anybody knows what a black swan is, there's probably 500 of them right now. So I think we're going to see a change in the market anytime that will probably last 18 months, followed by massive inflation and appreciation. So holding property, if people can buy right now and they can hold for the next 18 months, I think they're going to look back at their real estate as the thing that has actually separated them from being absolutely ridiculously poor versus extremely wealthy. And so I'm telling people, hey, buying right means if you're buying property, you want to be able to have the operating cash to cover the mortgage and any vacancies, or, normally it's been like 6 months. I would say 12 to 18 months.
Mm-hmm.
I see a lot of people, a lot of investors that think this is full speed ahead and prices will never go down, rental rates will never drop, or renters will never stop paying, and they're taking a lot more risk. So I am telling people, if you're buying real estate, make sure that you're, buy location, location, right? That's the number one rule in real estate. I like buying properties that have value add. So properties that need some work. I'll give you an example. I'm closing on 2 properties this week. One, I'm buying with a bad tenant who the tenant has not paid in a year. So I'm in California and I'm buying this property for $145,000 that should have a value of somewhere between $260 and $290. And all I have to do is do the eviction. I hired an attorney. It's already in place. I haven't even closed. I hired an attorney. I gave him a retainer, and they'll start the eviction process. And that's a value add. I'm going to go in there. I'm going to do a little bit of work, and I'm going to turn it into an Airbnb, which is my strategy right now. We just closed another one. It was a property that was listed on the market. Usually I'm not buying a lot of MLS properties. I'm usually going direct to the seller. And this property was really turnkey, beautiful property, good price, still kind of at market. And same thing, we're going in and we're doing a little painting and a little bit of floor coverings and putting some furnishings in it, and we'll turn that into an Airbnb. And I got another one that I'm closing where the owner wants to finance it. So I'm buying it. I do a lot of these. People are like, oh my gosh, how do you do that? Well, you got a lot of older sellers, don't want to be a landlord. They're burned out landlords. But they don't want to pay the big capital gain.
Right.
And they want the passive income from real estate. They just don't want the work. So I'm buying it, putting about 11% down. I'm going to put $35,000 down on a $325,000 purchase. And the owner is going to finance at 2% interest forever.
Wow.
And then also, if I ever want to sell that property, she is very happy that I can actually do what's called substitution of collateral, which means, hey, I sell this property and I put it on a better piece of real estate. So I can, as soon as I want to flip it, so almost like a 1031, I don't have to go get a loan. I just move that loan over to the other property.
Wow.
Like a single, like my primary residence.
Yeah.
And I do that. So real estate its product is everywhere, easy to value. The numbers are simple. Anybody pretty much can do it. You don't have to have a PhD. You think of Wall Street, I can go find a $500,000 property that's worth $500,000, right?
Right.
And I can run the math and see if I can cash flow that and get some passive income. You go to Wall Street, after everybody's making, they jack up the property. So 500,000 is like 50 million.
Right.
They value it, right? And to me, it's like gambling. So I don't really like it.
It is gambling. It's not even like gambling. It is gambling. And I had Barry Dyke, and he calls it the big casino. He has a book called The Pirates of Manhattan. He calls it the big casino, or Welcome to the Casino Age, he calls it. Yeah. And with that, and the private equity people are doing, and it's hard to get good valuation. The Fed is distorting everything. Do you think even newer and experienced people think about real estate like you described? I mean, I think you get good at acquiring stuff, but I don't know that they always see the big picture. I was speaking at an event this past weekend, and I was talking about, our 5 principles. So principle 4 is liquidity, right? And I sell people 6 to 12 months of liquidity, right? And they don't want to do that. Like, I want cash, I got to keep money moving. I said, look, shit happens, right? COVID made it legal in certain states for your tenants not to pay you, right? But the banks still want their mortgage. So, and so if it doesn't happen, now you've got liquidity to find opportunities, but that's right. A principle. And so, but you think people get that? I mean, it seems like you're banging that drum, but I don't know if they always hear it.
No, most people don't. And I'll tell you why. Maybe I'll get a little conspiratorial here.
We've been lied to. With me.
I think we've been lied to. We have gone through indoctrination camps They call those what, public school?
Public school, that's right.
And then,
Government indoctrination camps, yes.
yeah, right. And we've been taught to be indentured servants. We have been taught, all of us, to basically be a cog in the system to make the bankers rich.
Right.
The banking system and the banking family. I don't know anybody that actually ever learned how to balance a checkbook in high school or junior high, right? And we've also been taught to, the 40-hour work week. Like, everybody's been taught the 40-hour work week. It's like, why do we work 40 hours? Nobody really stands back and says, why do we work 40 hours? That actually was created by Henry Ford.
Oh,
Henry
really?
Ford created the 40-hour work week when he was trying to figure out how to get more throughput out of his manufacturing facilities. And he's like, he was like, okay, I need to go build more. And what they came up with is, you got a 24-hour day, and we could have 3 shifts, 8 hours each. And he probably would have had everybody work 7 days a week, but he realized, okay, 5 is about as much as they can tolerate. So the 40-hour week came from Henry Ford. And so I think you have to take it's a paradigm shift. You have to start thinking like a banker, do what the bankers do. And it's a huge mental shift. I mean, most people don't even understand money. They don't understand that money is made out of debt. They don't have a clue. There's a great cartoon series called Money as Debt on the internet, on YouTube. And I think everybody should watch it. The whole history of our money system, or read The Creature from Jekyll Island.
Yes, I'm a big fan of that, G. Edward Griffin and that whole thing. Because that's like your Morpheus giving you the red pill, right? And it's like, okay, wait, all right. So you mean bailout is the name of the game? That's not like a special thing. That's why I was created, right. Socialized losses.
Yeah.
And
right.
yeah.
Right. I actually, and I'll give this to everybody on your show, Curtis, all of you that are here today. I am about to release a new book. It's been on my bucket list for a decade. It's called The Freedom Code. And I wanted it as a disruptor in our industry. And it's a faith-based book, but it's all the lessons. And what I share in there, that everyone is 7 houses, 7 single family properties from complete financial freedom. And I walk through it in anywhere in the country. You buy a $100,000 house, you don't even have to buy it at a discount. And I show everybody over a period of time how they'll be financially free. I've learned in real estate, there's the tortoise and the hare. My whole life, Curtis, has been the hare. I've always tried to skip steps and go fast. I'm a natural sales guy, and sales guys like A to Z, right? How do I skip all the middle of the alphabet and get right to Z? Real estate is a tortoise game. It's a long-term play. And here's another thing that I'll share. Most people in our industry they call themselves real estate investors. They're not. See, Warren Buffett calls a real estate investor, by Warren Buffett, is somebody that has money. They buy a physical asset that happens to be, the asset class is real estate. Could be anything. It could be storage, multifamily. And they hold it for the long haul. And they take all the benefits of real estate. And so most people that are in the real estate, they call themselves, they're real estate investors, are actually real estate business operators. They're running a business, and typically, like, there's what are called wholesalers. These are people that are not even holding the property. They're just making some cash, or they're buying, fixing, and flipping the house, or they're rehabbing and flipping, right? That's a job. That means you do some work, you get one time paid, then you got to go do some more work. What we're looking for, the whole name of real estate is passive income. And Robert Kiyosaki, another Rich Dad, Poor Dad, one of my favorite books ever, where the light bulb came on for me. The light bulb was, if you have enough, the definition of wealthy is when you have enough passive income, that's mailbox money,
right?
Never have to do anything, it exceeds your expenses. So most people, they're that I know that they're in real estate, they're like, they want to do 100 deals a year. It's all beating their chest, or they want to have $10 million in the bank. That's a trap. Really, you look at how much passive income do you need? It's not a lot. Most people, it's $10,000 to $25,000 a month. If you had that, you're done. You can live whatever type of life. And so real estate, I think, is a long-term play. There's 3 buckets. There's what I call cash now, cash flow, cash later.
Okay.
Most people are just looking at one bucket like cash now, and that's a job. I call a job just over broke.
Okay.
JOB.
Mm-hmm.
So cash now is needed because a lot of people, they need the quick money. The cash flow is typically the rental income, passive rental income, or passive income coming from notes, private lending notes,
Right.
secured by property. That's what I like. And then the third is cash later, which is typically the appreciation. It's a tenant that's paying down a mortgage over time, and then the appreciation on those asset classes. And so I think everybody, when I teach people, it's like you want to always be looking at every deal from day one at those three buckets and make sure that you're always building them. And then if you are a real estate business operator, I always say keep the best and then sell the rest, and continue to try to get yourself free and clear. I was speaking probably, I think he's number one or one of the top at Keller Williams out of Columbus, Ohio. Great team. His name's Jeff Cohn. Very well-known podcast and real estate investor and also agent team. And I was speaking on his stage, and a kid came up. I call anybody less than 50 is a kid to me.
Right. Okay.
So I think he's probably in his early 30s, and reminded me that he met me a year ago. And he, wonderful guy, lives in the Midwest. And he said, Gary, last year I came and asked you for recommendations. He had a spreadsheet of like 27 properties that he owned, all fully leveraged. They were heavily, heavily leveraged. And he goes, Gary, I hear where you're saying the market's going to go, and I got 2 little kids and a wife, and what would you do? And I said, here's what I would do. And I told him to unload, said, walk me through like some of these properties. I'm like, unload these 10 properties and make these other ones free and clear, and give yourself passive income. Those will be the ones in any downturn market. Those will be your hedge. And then you can continue to grow that, but try to keep at least 1/3 of your portfolio free and clear, no mortgage, right? Totally goes against the grain. Everybody is taught.
For sure.
Mortgage.
Yes. Yeah. Uh-huh.
So he came and he did it. He showed me the properties. He goes, I have more passive income I've ever had, my stress level. And he goes, now I'm not having to work 80-hour weeks trying to just feed the cog, right? And feed the system. He's like, now we're able to take vacations. I'm getting to hang out with my kids. Because here's the most important thing. It's not the money. It's the free time, right? We're here for a very short period of time on this planet, and people, we work. We're trained to work until you retire, right? And then most people, I think the average age is 18 months after most men retire, die, right? What I would teach people, you want to get super clear on why real estate, and what do you want real estate to do for you, and how many hours do you want to work? And then the how comes from that. So I know a lot of people, they want to get into real estate and they work a full-time job. And I tell them, instead, go build your infinite banking system, because you've got a lot of income coming in. And then go in and actually partner or lend money or partner. Like if I do an apartment complex, I get people that will call me and say, Gary, I've got this apartment. Would you be interested in partnering with me on a partnership on an apartment? And I say, I think like a banker, right? I don't want to be in partnership with anybody. So what I'll do is I'll lend money, but when I lend it, I'll get a nice fixed rate of return, right? An interest rate. Typically I'm doing interest only. And then I put a little thing in there called a performance mortgage, which means I'm going to get a piece of the proceeds, the net proceeds and tax benefits. I can do it as a loan, and I'm not, and I let them own, right? If there's somebody breaks an ankle or breaks their neck, who gets sued? The owner, right? The lenders don't get sued, very rarely. So I like to.
I love that, because when we teach principles, the first principle is to save. Like a lot of people skip that step too. I say 15-20% of your income, and now you're liquid, because if you have capital, opportunities find you. You don't even have to go looking. And, that was, and so if you make a lot of money out of guys, I send them some episode, I'm going to send this one too, of the show of people, look, this guy makes a couple $100,000 a year. and he just doesn't have time to do all of the driving for dollars and that kind of stuff. So I said, so you just need to position your capital. Either I like lending. Even like the only thing I like with the 401ks, the self-directed, is lending. I don't believe you should buy real estate. That's just people trying to sell you 401ks. I mean, why would you take? I was talking to Tom Wheelwright. It says, why would you take a tax favorite vehicle and put it inside of a tax deferred vehicle? But I like it for like private lending, life settlement, certain things like that, for the self-directed. But if you can capitalize your infinite banking, your insurance policies, then you've got more freedom and your money's still working over here. And but it's all about thinking like the bank, thinking macro and not just being in love with the excitement. Everybody remember, investing is supposed to be boring, right? That is so powerful. My mind is racing now. I got to calm myself down so I can think of a better question.
Actually, this was, and you and I were talking about George Antone, good friend of mine. We actually did the banker's code, where we were teaching people how to make money out of thin air like the bank using hypothecation. Now, I don't think that model works today. It only works at the beginning of a new cycle.
Mm-hmm.
Money is too easy to get right now to do what we were teaching. But George used to say something, and I've repeated it, but I want to give him credit. You want to fall in love with the cash flow. Don't fall in love with the property.
Right.
So I'll give you an example. I'll go out and I'll look at real estate, and I'll bring my wife with me. And I've actually learned, hey, when I'm going and looking at properties, I usually, unless it's like, a house we're going to live in, I try not to bring my wife, because I look at a property and I'm just looking at the numbers and how much cash I can get out of that thing and the upside, right? I like problems. When you're buying as a real estate investor, you're exchanging problems for money.
Right.
And so the bigger the problem, the more money I typically make. And so a lot of people will see it's like, oh, it's kind of needs all this, it needs a new roof, and it's got, carpet, and it's got mold everywhere. It's like, I'm looking at the cash machine, right? I'm looking at, oh my gosh, this thing is going to be a gold mine. And so you want to fall in love with the cash flow, not the property. A lot of people everybody gets sucked into it. We had a property in Maui. I unloaded it during this COVID period, but I fell in love with it because we had this great thing. That owning in Hawaii was a terrible investment. I mean, we made money. Don't get me wrong. I bought this condo in 2004, but it was in an HOA. It was a condo, and we started 2004. It was also 90% leased. So 10% fee simple, 90% is owned by a family. It was right on the Kaanapali golf course. Beautiful thing, ocean view. $700 a month for the HOA fee when we started, and when we sold it this last year, it was at $3,300 a month.
Wow.
So
not counting the debt load, debt service,
not including. So our break even, it was $6,000, $6,500 a month just to break even. Anyway, fall in love with the cash flow, not the property. And I think so that's number one. And then on the lending, that's real estate, is, buy right, have reserves. You want to know what the exit strategy is. I like Airbnb right now. I think the Airbnb rental market, I think, has huge upside. Also with COVID, it's a lot harder, especially in California, to get bad tenants and evict tenants. I call that communism, but I mean, you own a property and, you can't get rid of a tenant. It's ridiculous. But I like Airbnb. And you want to be able to buy in better locations. And they're putting a new ski resort in. Big owner bought a ski resort. I'm up by Yosemite. Lots of foot traffic. So we're actually buying on a particular freeway, pretty close to the freeway, and about 30 minutes from the ski resort. And I run the math, and we bought a property. We'll get about 7.5 to 8.5 cash on cash return. That's planning about a 60% occupancy. So, being conservative, we'll probably rent it 80% of the time. But what do? I think like a banker, and I'm saying, hey, I want to look at it at 60%.
Right.
And run the math. So
That insight is
So
so
that's
incredible. Yeah. Let me think about on the Airbnb thing. So you buy them, but I know there's a group of people that will, I forget what they'll go to the current landlord and offer the Airbnb. Do you like one strategy over the other, or it just depends?
I like to own the physical asset. I do know some people that will go in and do sort of lease options. They'll have an option to buy. That's interesting. But I was actually at the Warren Buffett Berkshire Hathaway shareholder conference. They said something, think of the COO, he's 95 years old. He said his success model is KISS, K-I-S-S, keep it simple, stupid. So I always follow my rules. I like to own, and I just don't break the rules. So I like to own the physical asset. I prefer to have less debt than more right now in the current market. Kind of goes against some of the rules. Some of what other people say, oh, leverage it up, take advantage of it. And I think with what we're going to see here in the future, if everybody's watching the world scene, like what they call the global reset,
right?
I think that, which is to get rid of property ownership, by the way, Klaus Schwab, World Economic Forum, that I'm looking for having more free and clear assets. And then on the lending side, I only want to do first position right now. I want to be in the absolute, I want to be just like Wells Fargo. I want big down payments from borrowers. I'll take a little bit lower interest rate, but I want to know if the market turns or the borrower's not paying, that my downside is I have to take back the property.
Okay.
As the owner.
Right.
So if I'm lending it 50 cents on the dollar, right? The borrower, these deals exist everywhere, but borrower, a deal that I just funded, it was a $250,000 loan. The borrower, the owner of the property, put $500,000 in cash down, right? So I'm putting $250. Do you think I'm pretty secure? So the market can completely implode. Biggest earthquake in California, it could be left with rubble and just the land, and I'm still happy to be able to acquire that type of property. So, and I get 8.5% fixed interest with no work. So that's follow the rules. That's real estate by right. And then if you're lending, basic rules of lending, you always want secured, always go through a licensed broker or title company. You always want to get a lender's insurance policy and do first position with big borrower down payments.
I have a client that would love you. She loves debt though, but she calls it, she's her background in engineering, and she likes what you call principles based investing, and she's like the what I call the HUD queen, right? So she leverages it, but she has guaranteed income, so her pandemic didn't bother her at all. But she loves that conservative approach is how she thinks. I might forward her the raw feed of this because I think she'll love it. But I want to ask you two tactical questions as we close. I appreciate your time. One is just because I want people thinking from a business perspective. So because we talked about, enjoying your life, right? How to build a business that works for you, right? And learning the power of leverage. And then I want to follow up. So I want you thinking about it is because people get bogged down in minutia, how to remove yourself from 10-hour tasks and focus on 1,000-hour tasks. And then, I want to I saw those. I want to kind of get those out on the air.
I'm going to give everybody something right now. It's a website. You can go. And I actually did, it was the weekend of COVID. It was last year. I was a speaker. I was the last speaker at a very good friend of mine who was putting on an event with 400 people as everybody was like running to the airports because making sure they could fly home. And I delivered an hour-and-a-half presentation called Around Real Estate on how to build a business that works for you with all kinds of lessons and tools. And I have that recording and all the tools, as well as a lot of all my lessons learned. And I'll give everybody my free book, The Freedom Code, when it comes out. So that website is realestateinvestor.com/growth, GROWTH, realestateinvestor.com/growth. And because this could be a lengthy topic, but here's what I would say. Real estate, number one, real estate is a finance game, and it is a game of leverage. All right. But most people, the leverage, you borrow money at one rate, you rent the property at a higher rate, and you get the spread. It's the same thing in banking. There's a spread on lending. People understand it. But it's not just leveraging other people's money. You have to learn how to leverage other people's time, other people's experiences, other people's resources. And one of the mistakes I see is that people will get into the business and then they'll try to do everything themselves. And they're doing $10 an hour work. So on this website that I just gave everybody, there's a very simple calculator. You need to know what your time's worth. And so how much money do you want at the end of the year in your bank account from your real estate or whatever it is? So the example I have is, let's say it's 500,000. And let's say, and then it says, how many hours a week do you want to work in that business, right? Physically working. That's 40 hours a week. Somebody might put 10, but very quickly, they'll tell you exactly what your time's worth. Mm-hmm. So if you were working 40 hours full time in real estate and you wanted to generate a net of 500 grand, that means your time is $250 an hour. And so every time that somebody is spending their time doing $10 an hour work or not $250, they're not going to have the bank account. Super easy. And right. So like I always tell everybody, every business needs a CEO. And if you're a CEO doing $10 an hour work, you're going to have a $10 bank account. So as an example, I'm buying these properties and I do nothing afterwards. So I put people in place, good people, to do everything. So, for instance, I have a daughter who's 22. She just graduated from college and she is now following my principles because she knows that she loves to serve and more service, but there's not a lot of money in that. So she knows over the next 5 to 7 years, she wants to use real estate as the vehicle. So she's basically getting engaged, learn the property management, right? So she found a great painter for about half the price, and they're over painting the property right now. Do I look at the colors? I don't look at the colors. I don't care about the colors. They come back and they say, hey, this is what we're thinking. And we usually have kind of cookie cutter stuff, and we're having the floor coverings. And so all I do is I manage the books. I find the deals. I get the good price, and I make sure I'm managing the nickels with a good team. Mm-hmm. So very, very little time. I'll probably have less than an hour a month, 2 hours a month involved in any property. Second thing is, as King Solomon said, one of the wisest men in biblical, I'm a faith-based guy. He says, nothing's new under the sun. Real estate, there's nothing new under the sun. Real estate has all been proven. And so don't reinvent the wheel. You want to find, if you're trying to do something, whether it's buying a single family, doing Airbnb, or buying a storage, or buying an apartment, find somebody that's doing that work and follow exactly what they do. Get a course from somebody or get some mentoring and some coaching from somebody and do exactly what they tell you to do. Don't change anything. If they tell you do these 10 steps, do those 10 steps. And then once you start having success at it, then you can modify and make it better. Mm-hmm. So I think of the movie The Matrix. Remember the movie when Neo went in and he wanted to learn how to fly a helicopter? He just plugged in, right? And 15 seconds later, he knew how to fly a helicopter. That's really, for me, when I'm going to go learn something, I just go find and pay the course or get the coach. It is success insurance. It is a best practice. So don't try to reinvent the wheel. A lot of people, they get into real estate, they're told what to do, and then they act like a third grader. It's like, oh, I got to do it myself. The failure rate's super high doing that. I'll give you a simple example. A lot of people get in and they're told, oh, you need to go you're not going to find anything on the MLS because they're too expensive. You got to go direct to the seller. And so you got to send out postcards and letters. And so people will say, instead of writing a check to an expert like realestateinvestor.com, right, where we can come in and say, how many houses do you want in that area? And then we'll do it for you, right, with the phone team and the direct mail because we're experts. Mm-hmm. But instead, they'll lick stamps and they'll send out postcards and they'll put out 400 or 500 of them and then say, it doesn't work in my market, which is not true. So you want to basically write a check and get somebody else to do it. That's the leverage. So, by the way,
right? Who not how?
Yeah. Who not how?
Yeah.
Who not how? I know we can talk forever and we'll kind of wrap up here, but if I can't do as a CEO if I can't do it on my cell phone, my team is taught to only interact with me on the phone, because my first thing that I do is, oh, get out of my way, let me go do it. I'm forced to actually leverage other people. And I never thought I was a good delegator. I'm a good leader, but I never thought I don't have the personality style like the manager until I got coaching. So now I take the time to, what is the outcome that I want?
Mm-hmm.
Right. And I think about the outcome. And then I basically give that outcome to somebody to do it for me. Right. It's like, hey, I want to have this Airbnb. I want it fixed up, and I want it fixed up in 6 weeks. And I want to do it, for $25,000. Show me how, and come back with the plan. And then they come back with a plan instead of me going and figuring it out and then doing all the work. Yeah.
Yeah. I like your way. That appeals to me, because that's not even my unique ability. Like, I like my business, but I'd rather, learn how to leverage and get somebody else to do it, because I do need to be in that business from an economic standpoint. Yeah. But yes, that is awesome. So, closing thoughts, or where would you like them to follow you and kind of see what you're doing out there?
Yeah, I'm gonna. If you want my book, and you can go to realestateinvestor.com/growth.
Mm-hmm.
I'm going to be launching a new podcast called The Freedom Code here in the foreseeable future. So stay tuned for that. We'll also email you when it's available.
Mm-hmm.
I'm super passionate about the Freedom Code because there are a lot of people that are trying to figure out how to survive and thrive into this, new world.
Right.
Kind of where COVID goes. A lot of people are being displaced. A lot of people are trying to figure out, what the money system is going to look like, and also a family economy of how to do things and do it well using real estate as a vehicle. And so I'm passionate about that. And we're going to be really focused around all the different methods around that. So a lot of content there. I have a long-term podcast called Real Estate Investor Huddle that has been out there for a couple of years. And so that still goes. I usually release a new podcast once a week. And then if you are a real estate investor and you are looking to leverage other people, and especially for finding great deals that are not on the MLS, where you have to go direct to the seller, we have a direct to the seller solution.
Okay.
To free you up. And we've done over 90 million pieces of direct mail. I've got a very large phone team that basically qualifies, does all the phone work, which is really where the work is, and then hands you the qualified deals. Hey, this seller is ready, willing, and able to sell, and here's the details of their house, and then you can take it from there. And so that's realestateinvestor.com with software and done-for-you services, and then a ton of training and partners associated with this whole ecosystem of real estate.
That's a lot. All right. We're going to get all that in the show notes. And Gary, thank you. Oh my goodness. Listen, y'all have listened to this at least twice just to get all of the nuggets he dropped there, and philosophical, his principles, his thought process, what to do, how to look at the economy. I'm trying to figure out what the title of the show. And, but this is so powerful. I really hope to stay in touch with you, because you just blew my mind. I know you blew our listeners' mind, and I'm, like I said, I've been following you for a while, so I'm so honored to have you on the show. So,
awesome,
Gary, thank you so much, and I look forward to the book. I will you just email me when it's available, and it's I will buy it and recommend it to everybody, because
awesome.
It's all about freedom. Yeah,
for sure. Thank all of you for being loyal listeners, and it's awesome, man. I love everything that you're doing too, Kurt.
All right.
Awesome.
I appreciate you guys. Go out there, make it a great day, make it a prosperous day, and check out the show notes. We're going to have all of his stuff that he mentioned in the show notes. And all right, we'll talk to you next week.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission